You've likely heard the term inflation in the news, at the grocery store, or when discussing the economy. But what is inflation, exactly? Why does it happen? And how does it affect your daily life? In this video, we're going to explain inflation in simple terms, and why it matters to everyone, whether you're a student, a worker, or a business owner. What is inflation? Inflation is the rate at which the general level of prices for goods and services rises over time, reducing the purchasing power of money. Simply put, inflation means that over time, your money buys less. Let's say last year you could buy a loaf of bread for $1. This year, that same loaf costs $1.05. That increase is an example of inflation in action. Inflation is measured by a number called the Consumer Price Index, CPI. This index tracks the prices of a set basket of goods and services that people commonly purchase. Why does inflation happen? Inflation occurs for several reasons, and it doesn't always happen for the same cause. Here are the main drivers. Demand pull inflation. When demand for goods and services exceeds supply, prices go up. For example, if more people want to buy homes than there are homes available, home prices increase. Cost push inflation. This happens when the cost of production increases. If the price of raw materials like oil or labor rises, businesses pass those costs on to consumers in the form of higher prices. Built-in inflation. This type of inflation is driven by expectations. If people expect prices to keep rising, they demand higher wages to keep up, and businesses raise prices to cover those costs. This can create a continuous cycle of rising wages and prices. How does inflation affect you? Inflation touches every part of your life. Here's how. Price increases. Everyday goods and services like food, gas, and housing become more expensive. Erosion of purchasing power. The same amount of money buys fewer goods. For example, if your salary doesn't increase with inflation, you'll feel the pinch. Savings. Inflation can erode the value of your savings, especially if interest rates on your savings account don't keep up with inflation. Interest rates. Central banks, like the Federal Reserve, may raise interest rates to control inflation, making borrowing money more expensive. Is inflation always bad? Not necessarily. A small amount of inflation is normal in a growing economy. In fact, central banks like the Federal Reserve target a modest inflation rate of around 2% per year to encourage spending and investment. However, high inflation, also known as hyperinflation, can be very damaging to an economy. It can cause instability, disrupt savings, and make it difficult for people to afford even basic goods. How can you protect yourself from inflation? There are ways to protect your finances from the impact of inflation. 1. Invest in assets. Stocks, bonds, and real estate often outpace inflation over time. 2. Save and budget wisely. Be mindful of your spending and try to increase savings to combat higher living costs. 3. Look for income growth. Seek out opportunities to increase your income, whether through side jobs, skills development, or salary negotiations. Inflation is an inevitable part of the economy, but understanding it can help you make smarter financial decisions. If this video helped clarify what inflation is and how it affects you, please like, share, and subscribe. And let us know in the comments, what other economic concepts or financial topics would you like us to explain? We're here to help you make sense of the world around you. Stay informed and take control of your financial future.